Good afternoon. Welcome to daily currency update from the currency desk. Today in the morning session we had a major depreciation in the Indian rupee as we came back after a holiday on Wednesday. Major market trend seems to be sideways as there seems to be a string of some negative developments as well as an increase in the quantitative easing expectation or the monetary stimulus which is expected from the US Federal Reserve. On the Indian front, on Tuesday we had the CPI, that is the consumer price inflation figures, which were released, and these figures were better than expected, and actually we saw the rate of inflation coming down. Now there are two things that can happen in this scenario. First is that the inflation has actually cooled off and may continue to cool off. In this scenario, we might see the RBI giving in some growth stimulus after a month or so. But if the inflation is lower because the demand is slowly and steadily deteriorating or rather eroding from the markets, then there would be serious growth concerns. And due to these growth concerns, we could very well see an immediate measure or a monetary stimulus being given in by the RBI in form of rate cut or the maybe rate stimulus or injection of funds in any form. Yesterday, as our markets were closed, we had the UK data wherein the rate of joblessness actually came down, and this gave in some support to the pound. But all in all, we are not seeing any strength in the pound against the dollar as well as against the Indian rupee. Today we have the UK retail sales data, and if this sales data is better than expected, then again we could have some strengthening in the pound and the euro. But if there is another negative indication from the UK economy, then there could again be some depreciation in the pound. Overall, the fundamental view on pound and euro remains downside. So any trigger in this direction would bring in some huge movement. We had some string of positive data from the US over the past few days, and due to this positive data, we witnessed a major depreciation in the Japanese yen. This was quite against the trend since the past 2 months, as the yen has constantly remained strong against the US dollar. But we did witness some correction in the Japanese yen, which was overdue as per us, and this had been predicted by us last week that if we see some positive developments on the US side, we could well witness the yen actually depreciating. On the euro front, there are no major news triggers, but as there are no major news triggers, the markets could well keep an eye on the US data. If the US data and the US events are better, then we could well see the euro trending and vice versa. Today we have the US unemployment claims and the building permits data. So these two could give some direction to the market movement. And over the week we could witness some rally in the risky assets. In terms of dollar, euro and pound, we see a bullish trend developing technically against INR specifically, and one can initiate buy in dollar above 56.19 levels. In euro, one can initiate a fresh buy with a stop loss of 68.62. In terms of yen, also the movement seems sideways to bullish. So if we have a major movement and it crosses 71.11 in the spot, we could well initiate a buy in the yen against the Indian rupee. Thank you.